Hemindra Hazari is joining us with his thoughts on that. He's head of research at Nirmal Bang Institutional Equities. Thanks so much, Mr. Hazari. Appreciate you taking the time. So let me start with restructuring. That's the more important part. And, you have for a while flagged off concerns on that end. What did you make of the broad guidelines, the proposed increase in provisioning to about 5%? Do you suggest that that's more or less adequate? That's a good number to move up to?
Yeah, I think moves in the right direction. However, you must realize that the minimum provisioning for a substandard asset starts at 15%, while here if these norms were to be introduced, it would be at 5%. So there's still, a lot of leeway and a lot of under-provisioning yet to happen. But nevertheless, it is a step in the right direction, and one would see higher provisioning taking place, because the worry for investors today is the quantum of restructured standard loans and not so much the NPA. Because the restructured standard loans is many times the reported net NPAs.
Just wondering, so, on the assumption that we do see the RBI accepting these, so that 5% number, are you starting to build it into various banks already across your coverage universe, for instance, sir? What could be sort of the quantum of hit on profitability on account of that?
There would be, of course, an impact on profits, because today you have a very strange situation in which a lot of companies are reporting a decline in earnings, but banks as a sector are reporting an increase in net profits. It is really not taking into any cognizance of the deterioration which is taking place in the Indian economy. As a result of which, and hopefully if these norms are introduced, one could see bank earnings actually as a sector taking a knock. And of course, that would depend on the incremental flow of restructuring that were to happen in the industry.
Okay, would it be fair to say that it would be sort of PSUs more than private banks? Although, even some of the private banks have been pretty heavily involved in the restructuring process.
Yeah, a lot of the PSUs would definitely get impacted, but I would also guess some of the large new private banks, like say an ICICI Bank or an Axis Bank, would also get impacted once these norms are introduced.
So let me talk a little bit about some of the other issues that were brought about. One was, just treating restructured assets as impaired. And while the committee is saying that you probably can't do that immediately in the current environment, but over a period of 2 years, perhaps you could move towards that. Firstly, do you sense that the RBI would accept that? And again, then that would be a significant move towards global standards.
Yeah, because today internationally, a moment you restructure an asset, it becomes in fact an NPA, in which the minimum provisioning norms have to start. And now the committee has rightly said that give us a 2-year window for this to happen. Now this would all really depend on how the economy really responds, because if the economy continues to deteriorate and you have a lot more accounts becoming restructured, and the banks, if they were to show it as NPAs, would have a very sharp knock on their earnings. No regulator would want that the banking industry that it regulates, reports, a drastic fall in profits or a loss, which would damage the credibility of the banking sector, of depositors, and even of the regulator. So it all would depend really how the economy grows from here. If it were to deteriorate very sharply, then the RBI may even extend that, those number of years.
At least they're moving in that direction based on these working groups. So the other thing that was talked about, and this has also again been discussed, is more sort of promoter skin in the game. They're talking about personal guarantees. They're talking about sort of capping the amount that you can that you need to put in as part of restructuring from the promoter end. All of that, sir, important moves.
Yes, I think that's extremely necessary, because what we are finding today is that a lot of companies are really rushing for restructuring, even though they really don't deserve it. And as a result of which, we are finding that companies where promoters have diverted the funds either into real estate and have locked it, they're again coming back for restructuring. Definitely such cases has to be dissuaded, and dissuaded very sharply. And therefore, it has to be, the promoters really also have to feel the pain that the banks are feeling.
But that then comes down to probably a case-by-case basis, right? You can say give a personal guarantee, but then at the end of the day, do they actually make good on that personal guarantee? Depends on the individual bank that's dealing with them and how tough they are.
Yes, but I think at the same time, it must realize that if they cannot do that, then the account must be classified as NPA straight away, and all efforts must be made towards recovery. See, today corporate India is really not feeling that pain that the banks will take over management. So far, to the best of my knowledge, no bank has really done that, but that also has to be implemented. The unit can be given to any other larger, more efficiently run player. But today you're not really seeing that. So today the promoters in corporate India feel that they can get away with, with anything. So that has to be stopped.
That's absolutely true. Just a quick last question, sir, on the priority sector guidelines. Not much of a change for domestic private banks. A bit of relief that there's no sub-target for small and marginal farmers lending to them. But for NBFCs, perhaps a bit of a relief on the securitization end. Would you say that's positive, broadly speaking, for the NBFC category?
Yeah, broadly I can say that, but what has happened over these number of years is the definition of priority sector lending has widened to such an extent it really defeats the very purpose of having something called priority sector. So it has to be really priority sector is meant for those borrowers who are desperately in need. You are finding a lot of loans going to agriculture which are very large amounts per farmer, which does not appear to be realistic. So in my opinion, if you really want to be focused on priority sector, you have to really tighten the definition.
All right, but as things stand, do you happen to cover hereon transport finance? Because I think everybody is talking about this being a positive for them more than anybody else. I think the stock's up 3% odd. Anything on the NBFC end, sir?
No, unfortunately, we are not covering NBFCs.
All right, Mr. Hazari, thank you so much, sir. Appreciate you taking the time to discuss the big picture on some of these new norms and suggestions that's come in.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.